welcome to another episode of the Eitel Insights podcast. My name is Dane Eitel, and I am the founder and lead analyst for Eitel Insights. Now, today we're going to go over the Greater Vancouver Condo Market update and basically the fact that the condo sellers and condo potential purchasers should prepare for some upcoming volatility to the market. And of course, we'll get into that content. But before we do so, of course, we ask that you give us a thumbs up on the podcast. It makes us feel good about the content that we are releasing for you. And likewise, that you share this on your platform, social media platforms, with your friends, with your family. Our subscriber count is growing, and of course, we would like to keep it going that way. So basically, the Greater Vancouver Condo price market, or the price chart that I'll just toss up on your screen here, it hasn't moved in 3 months. Okay, so what's going on here? Basically, we're in another phase of stagnation. Now, this stagnation is occurring basically right at the upper threshold of the middle of the market cycle. Okay, so average sale prices in July were 680,000. Now, what's interesting, and you might have heard some of this, like the sales numbers, they are undeniably higher, but they're still well within the range, which is interesting. And of course, we'll get into all that as we progress in the podcast. But really what I'm trying to get across to you here on probably the majority of the podcast content today is that there will be upcoming volatility. Now, you see, last time that we had a stagnation phase was during 2019. We basically had 6 months where prices only moved in within a 1% range. After that, we saw prices shoot up. I think it was $50,000 to just below $700,000 in February of 2020. Of course, we saw the reversion go back. I believe it was $5,000 below that previous stagnation phase again in March. So there will always be volatility after a period of stagnation. Now, seemingly the market chose pre-pandemic to go higher, and of course resulted in a new lower high. This market is also continually forming this seemingly new downtrend, which is of course in the yellow on your screen. And that's basically just to say, hey, listen, there's not enough data points. After about 3 or 4 data points, that will switch over to orange and say that this is a confirmed downtrend. That could happen here upcoming in August, where prices, again, we're dealing with previous month's sales that are completing, and that's actually the sales numbers that are showing up. The sale prices is actually what's going on in that particular month. So as inventory is increasing at lower prices, you can actually maybe see the average sale price jump up a little bit, but going forward longer term, we're definitely expecting this market to bottom out. It will likely bottom out in 2022. Now, the market is down 10% from the peak during January of 2018, when the market's average sale price was $751,000. Now, you see on that chart previous, there's a real kind of topping out effect. Now, when we go to the bottom, there will be a similar bottoming out effect. That is not the case right now, and I know our followers are like, well, we just want these prices to go lower. And once the buyers figure out that they are in the driver's seat, prices will actually start to quite rapidly go lower, as they just sit on the sidelines and watch the sellers fight amongst themselves to see who's going to sell and who's going to attract the most amount of clients through an open house and potentially actually get an offer in on the property. But, and there is another factor that's going on here right now. We'll probably go into greater detail later on in the podcast. But, I mean, there's free money being floated around right now, not to mention really economic uncertainty and job uncertainty. There always has been, a mortgage rate qualification. Once that's transpired, you basically get a 90 or 120-day rate hold. Now, that means that you're already pre-qualified, you're ready to go out and purchase. If you know that you're about to lose your job, it's counterintuitive, but some people in this ever-indebted society that we are living in will actually go ahead and pull that trigger right before they're going to lose the job, because they figure between them and their partner, or them and their family, they can continue to pay the mortgage, and mortgage is similar to rent. However, there will also be a day of reckoning with that thought process. That's okay if prices remain the same and you had your same value, but prices are going lower. So you basically purchased for an asset class that's going lower, and you're going to have a struggling time paying that purchase price. In my mind, it would have definitely been better to hold off, wait 2 years, have prices realized at a much lower level. We're forecasting average sale prices to finish around $525,000. So that's quite significantly lower than where we're at. That's basically another 20% lower in this market cycle. So we're only at 10%. I would rather see the average sale price come lower, figure out my personal circumstances, career, finances, all of that over the next year or so, rebuild yourself back up so that you can take advantage of this in 2022. and everything goes tickety-boo because now your mortgages are at their lows. Interest rates will still be nominal. We're definitely not going to see any cataclysmic rise to that sector of the market. So you'll basically be in a much better position, not to mention once you actually own the property, you won't have to experience 2 years of decreased market value. You'll actually start to experience market increases, which goes right to your pocket. So that's of course how we always advise to purchase. And with this upcoming volatility, we would advise purchasers to be on the sidelines and owners or sellers that are in the market to be fairly aggressive now before you see this total onslaught of inventory that's upcoming, when you have even less chances to sell. And the buyer's mindset is even more in the ardent belief that, hey, I'm paying for a depreciating asset, and then there will be fear that will start to trickle in. And it's already starting to, but you will see that actually tick up and really rear its ugly head in 2022 when prices are actually at the low, but there's still fear of purchasing even though prices are low. And of course, we'll guide you during that period of time to hopefully show you our analytical evidence as to why you would want to buy during a market low. And we can actually identify when that market low is. Now, just on that, I'm going to give you a little bit of information and some of the kind of emails that are going around the industry to realtors and to analysts and to everybody. The pre-sale, some of the developers, they're putting out their forecasts, but they're actually saying, listen, I have no idea what's going on because they've been so wrong over the past two years or so. So now they've kind of tossed up their hands, but they're also going back to the long term, which is what some other people do. Again, a long-term forecast is fine and fair, but you need a short-term forecast to have a long-term forecast. So, the emails that are going around by some fairly reputable developers are saying, listen, our forecasts are out the window. We have no idea what's going to occur here, the remaining portion of 2020 or 2021 for that matter. But what I do know is that by 2035, real estate prices should have doubled by the 2020 values or 2020 average sale prices. So that's a 15-year projection to see a value double. But they're also saying, hey, please come buy one of my units. I mean, that's really what they're saying. They're saying, I have no idea what's going on right now, but the economy's opened up and it's a good thing for people to go back out there. Hey, why don't you come buy a unit from me? Help me out during this tough time. And I'll tell you what, if you can wait 15 years, you should see a double. Now, that's probably correct. However, I would rather see you buy in 2022 when it's absolutely at the bottom and see a doubling during a 7-year period, not a 15-year period. That's not how you invest. It's not an ostrich approach, but of course that's what they want you to do because they're in the business of selling you a house or a condo or whatever the case may be. And that's somewhat similar for some realtors out there. Some realtors, of course, they're people too. They got bills to pay, they got car payments, house payments, whatever the case may be. They need a commission to live. There's a lot of, hey, listen, it was going up before, but now it's going down. So can I buy? Can I sell? And depending on what you as a client would need, they will tailor their pitch to whatever will ingratiate themselves to you. We don't do that here at Eitel Insights. It's not our job to be optimistic or be pie in the sky thought process. It's actually about analytical interpretation, offering you actionable intelligence. Prices right now at $680,000 are going to be lower, much lower in 2021 and significantly lower from where they are right now in 2022. And that's just a fact. Now, to give you some evidentiary factors, we all know that I've been saying for a long time now, the detached market moves faster than the condo market. Again, we all know that I called the top of the detached market during 2007, published unequivocal, the first company to call the market top. Since then, when I called the market top, of the 20 markets, I have identified each market's individual market cycle. Out of the 20 so far since the market peak of 2017, with a data point collected in each market, I have been 100% correct by identifying the range in 6 out of the 20 markets. In an additional 5 out of the 20 markets, I'm 90% plus correct. In an additional 6, 80% plus correct, and then the remaining 3 are 70% correct. And even those 3 are the laggers. So that's, and of course, I haven't called the market bottom yet. During 2021 is when likely the detached market will take place. And that's when you'll see all of the 20 or a majority of the 20 will have actually eclipsed that 100% of the market fulfillment, meaning that we've had the top put in and the bottom has put in. What's interesting for those that are interested in the detached market, I know this is a condo market segment, but you know, of those 6 markets that have already hit 100%, they will double hit. No market cycle singularly hits the market bottom, especially a market cycle that is going this long in a period of time. So there's no concern of that. However, there are 6 markets that are realistically, plausibly buyable. Now, are they still at the 100% loss from the total eclipsion of the peak? No, a majority of these occurred during 2019. All the more reason why Eitel Insights analytics really proved up. We could have called the bottom like every other person, but not all the data points had bottomed out. It can't be the bottom until the overall market has fulfilled that volition. So again, stick with Eitel Insights for actionable intelligence. You'll get this kind of information absolutely nowhere else. Okay, so now let's switch back to the condo data points, and we're going to toss up the condo market inventory chart on your screen right now. Now, inventory rose again from June, after June saw a significant spike over May. In July, we finished at over 5,600 active listings. Now, what's interesting about that data point, again, the new monthly listings, similar to June, in July were outrageously high. It was actually the highest monthly new listing count for the condo market since 2010. And now the previous month in June, it was the highest month since 2012. So we are starting to break some significant data points here. Over the last 2 months, there have been over 5,700 new active listings added to the condo market. Now you say, well, how can that be if there's only 5,600 overall? Well, of course, there were some sales. And then, of course, inevitably, some of these new listings were previously listed properties that got canceled and then relisted, so they show up as a brand new listing, but they're really a similar property, probably coming in at a lower price or just trying to trick the market and taking some of the days off market so that it looks like a brand new listing, even though it's the same price, which probably doesn't have that much chance to sell. You do have to be aggressive as a seller in this market if you're not properly priced initially. A properly priced listing will still sell, and it will always sell, because as I've said, even in a worse market, there's 30% of the market that needs to buy and sell. So as long as you're properly priced, you will sell. What we've been saying is that going forward and since 2018, the proper price will be inevitably at a lower price point than what you thought it would be. So, and that just basically epitomizes what a downtrend is. They are lower highs. They're no longer higher highs. So that's this overall market cycle. What's also very interesting about this 5,600 total inventory is that we did break again that long-term downtrend that's basically been in place since 2012. We broke it briefly during 2019 there. We're back up to that. I don't know if we're going to eclipse 6,000 listings. We very well could before the end of the year, but of course we're starting to edge onto this seasonal factor. Going back a few podcasts, you'll remember that's what I said. That will be the last thing that's really interesting about these markets. We know prices are going to be going lower in the short term and the longer term. Maybe not the short term. Again, you could see August go one way or the other, but into September, October, November, December, January, February, prices will definitely be going lower. So now back to the inventory. Will inventory continue to rise in the months of September, October, November? We're seasonally around October. I mean, it's peaked. If September was a higher high, that's an oddity, but to see a higher high in October is just not really a reality that this market has experienced over the last 15 years. So will that occur and inventory keep rising and go above 6,000, go above 6,250? Who knows? We'll see. But again, we're living in uptrends after breaking the staunch downtrend of 2000 and the top to the bottom, 2018 to 2019, where inventory just eroded. Now we're back up to previous highs. Now it's only a one market top. But if you think about it, since 2015, the market has never had this much inventory except for that one blip previous. So to say that there's demand just because there were higher sales, it's a fallacy. It's a complete fallacy. To say that we're out of this coronavirus state because we're allowed to go leave our houses is a complete fallacy. To say that the economic impact is over is wickedly erroneous. Okay, so those aren't even close to being true factors. You're still seeing the rollout. What you're seeing now is businesses that were so eagerly anticipating the opening. They are opening, but there's not that much foot traffic. Bars and restaurants seem to be doing pretty well, but even at that, you see empty tables. They're forced to have empty tables. That can't be making the same money that they used to. The pet stores, the odd shop, they're just not as busy. People learn to cut their own hair. People learn to cut their own dog's hair. The idea of going out and buying a fancy new pairs of shoes or a fancy new watch just because it caught your eye probably isn't there. First of all, you're probably not walking through the mall as much as you used to, but secondarily, you're worried more about your next 2 months of payments. You're worried about maybe even some family members' health. So if they lose their job, maybe I want to tuck some money away to help them out. So there's a lot more factors going on than just saying, whoa, we lived through this and hey, people, come start buying. I don't see it rolling out that way. I know other people do, but I would definitely take the other side of the argument on that one, respectfully, of course. So I think that pretty much does it. Well, one more thing here before we wrap up with the inventory. Again, that eviction ban is seemingly coming to an end during September. So if you haven't paid rent, like, you might want to start. And if you're the owner that hasn't been receiving rent, maybe give a call to somebody and say, hey, listen, how do I expedite this? Because there's going to be a backlog at the courts to actually fulfill these evictions. So yeah, you can give it an eviction ban, but to have the bailiff come and put the lock on the door and evict the person might be a prolonged period of time, even after this prolonged period of time of not receiving rent. So again, you see where this cataclysmic event will actually culminate in 2021 into 2022 with all this brand new pre-sale inventory. We'll touch on that here right now before we again move on. Those pre-sales that were lined up and people were bickering about not being able to buy one because somebody else bought 6 and just so fervently mad, that owner that bought 6 really isn't gaining any money. If he didn't already assign that property and it's coming to completion now, there's one fella on Twitter, I believe his handle is Mortimer, and he shows evidence of properties that are selling below their previous sale price, even after, a 3-year completion, which is supposed to be the idea of a pre-sale. I buy it at today's value, market appreciates over the next 3 years, I can sell it at that year's time value, which is still true. However, the market did not appreciate it, actually declined. So you're still selling 3 years out, whatever that future value is. It's just not a positive future value. So that's what's occurring. Again, the inventory will surpass old highs. We're going to probably test 9,000 active listings during maybe the latter half of 2021, summer months, or again into 2022. And that's when you want to buy, when the inventory is just peaking. Nobody even thinks about wanting to buy a condo because prices have fallen off so much. That's probably when you want to buy. I mean, you want to be a little bit of a contrarian. Not all the time, but every once in a while, being a contrarian mindset isn't the worst thing in the world. So now let's deal with the sales. I don't want to keep this podcast too long. I know it's summer, and again, people are allowed out of their house, and the weather's decent, so I know everybody wants to get out and enjoy whatever summer that we can have left. So sales, I'll just toss this on your screen here. Undeniably, sales were up in July. I'll admit it, no big deal. But as you can see in the chart, it's still in the identified range. If you want to check out last month's chart, you'll see that it's still in the identified range. We don't move our ranges. Now, could it bump out in August? Theoretically could, because again, these are sales taken from previous months. So when we were allowed out of the house in June, and maybe even some sales happening now, but the sellers are looking for quicker completions. So you should see this probably not 3 months out or 3 or 6 months out. You'll probably see it in a 1 or 2 month out actuality. So could it break? Possibly. Will that actually have any long-term effects, or will this break out of this fairly staunch downtrend? I mean, a 4-line downtrend, that's a downtrend. I don't think so. It could be an anomaly, but so was that low, which basically hit the 500 sales, I believe. So that's back in April. I mean, that was an anomaly. It was an anomaly low, but again, still within the range. This one's anomaly high, still within the range. Could it bust out? Possibly. Will it come back? Undeniably. So going forward, we're going to see an increase in inventory and a decrease to sales. Now, in this condo market, there are, of course, 20 segments that make up this overall data. So not every market is the same. Some markets are hot right now. Some markets are very, very cold right now. So it does have a lot to do with price point. And going forward, we're going to see a cooling effect in each and every market. So if you are thinking about selling, maybe, I mean, for $250, we'll tell you everything you want to know about your market. We'll tell you if you're at the lows, if you're still at the midpoints, and you should maybe be thinking about getting out, or if you're going to kind of skate by this unscathed. By that we mean that your low prices have already fallen off And you know what, you might want to have an ostrich approach. If you can pay your bills, just, hey, put it in the sand. In 4 years, 3 years from now, wake up and then you can sell it again. But again, we offer you that intelligence, that you understand what's going on in the market. It's not my opinion. This is what the market is saying is occurring in your area. So, you know, rather than one guy that sold one condo and telling you that he can sell your penthouse or your house, or that they're an expert in a field because they sold one property is a fallacy. They don't know the market. They know how to try and attract a client. What we do is identify market cycles in every single market. Just on that, we are doing national right across the board again. I know that there was quite the request for that. So if you check out the Eitel Insights website and on the order page, you will see that there is a national database there as well that you can order from, again, for $250. If you want monthly subscriptions, those start, I believe, around $1,500. And then, of course, if you're really the ardent investor, we do have subscriptions at $5,000 that cover the entire market from start to finish and everything in between. So if you are interested in any of those higher level reports, if you add in the promo code Eitel Insights, no space, no capitals, Eitel Insights, you will receive a 25% off until the end of August. That being said, I think we're pretty much wrapped up for today. If you do have any questions or thoughts for a future podcast, please feel free to reach out to me. The website, there is contact information there on the website, or you can email me personally. It's dane@eitelinsights.com. Thank you again for listening. We do appreciate your thumbs up. We do appreciate it if you share this podcast with your friends and your family. And look forward to speaking with you in the near future. Take care, folks.